It's not just in the approach to Brexit that the government is failing to put the economy first. For too long, manufacturing has been undervalued by this government and indeed by too many commentators in our society. For all their warm words, whether Osborne's March of the Makers or the government's newfound enthusiasm for the words industrial strategy, for decades the Conservatives have created, encouraged and sustained a system that rewards those who lend and speculate over those who make things. Thatcher government's progressive abolition of restrictions on financial trading, culminating in the Big Bang deregulation of 1986, placed the needs of speculative finance at the helm of British economic life. When that government took office, the ratio of private debt to GDP was 60%. In the 30 years that followed, that has trebled. That increase wasn't due to banks supporting a healthy and productive economy by lending to businesses represented here today. It was because banks started lending to households and inflating house asset prices on a scale never seen before. At the same time, investment banks started creating new kinds of financial products, packaging up debt in increasingly opaque ways and becoming ever more removed from the real economy of where people make things and deliver things. Let me be very clear. Finance has a central and essential role to play in a functioning economy. Without access to finance, how would the entrepreneur or business person just starting out find the means to get their idea off the ground? How would a growing company afford new equipment that will make their businesses more productive and more profitable? Or expand their activities by opening new premises? Finance is the grease that oils the wheels of the economy, and without it, economic activity would seize up. But when private debt is twice the size of the real economy, when traders no longer understand the products they are trading, and banks are funding their own speculation rather than productive investment, something has gone grossly and badly wrong. Banks should be helping the real economy, not suffocating it. Let me remind you of the words of John Maynard Keynes when he said, "There cannot be a real recovery until the ideas of lenders and the ideas of productive borrowers are brought together again." Seldom in modern history has the gap between the two been so wide and so difficult to bridge. Keynes was writing about the Great Depression of the 1930s, but the gulf between finance and the real economy may today be even wider. We know the results. Money flows away from productive activities that you're engaged in that create jobs and export, to instead inflate asset prices, concentrating money in the hands of a few owners, not producers, while households become more reliant on borrowing. And we end up with an economy with more risk, more volatility, and more instability. It was a heads-I-win, tails-you-lose gamble for the banks, not my words, those of the Governor of the Bank of England. And we're all still paying for the inevitable crash. When the last Labour government stepped in to shore up our major banks as they stood on the brink of collapse, it prevented a total meltdown. But the public should have been given a say in how the banks propped up by our money were being run. And there should be a much more concerted effort to rein in bank speculation, to refocus on productive lending. We need a fundamental rethink of whom finance should serve and how it should be regulated. There can be no rebalancing of our distorted, sluggish and unequal economy without taking on the unfettered power of finance. For 40 years, deregulated finance has progressively become more powerful, its dominance over industry very obvious and destructive, its control of politics pernicious and undemocratic. The size and power of finance created a generation of politicians who thought the City of London could power the whole economy. Out-of-control financial wizardry and gambling regulated, while real economies in once very strong and proud industrial areas were essentially put into a process of managed decline. The welfare state was left to pick up the slack, with sticking plaster redistribution to the people and places held back by the finance-led boom of predominantly the southeast of England. For a generation, instead of serving industry finance, politicians have served finance. We've seen where that ends. The productive economy, our public services, people's lives being held hostage by a small number of too-big-to-fail banks and financial institutions. I simply say no more. The next Labour government will be the first in 40 years to stand up for the real economy, the manufacturing economy. We will take decisions and decisive action to make finance the servant of industry, not the masters of all. The reign of finance doesn't stop at the gates of the City of London. The extractive logic has spread into all areas of life, with short-term performance and narrow shareholder value prioritised over long-run growth and wider economic benefit. Take GKN, for example, one of the world's oldest and most prestigious engineering firms. It had a big factory in Telford, where I grew up, which employs 6,000 workers across the UK, contributes an estimated 1.3 billion to the economy, pays a healthy 174 million in tax each year, and invested 561 million in research and development in the UK alone. And yet, GKN is currently facing a hostile, allegedly debt-fueled takeover by Melrose, a company with a history of opportunistic asset stripping. It's an all-too-familiar story, like when Kraft took over Cadbury's, a valuable company could be sacrificed and make a quick buck. We rightly praise the growth of companies like GKN and their location in the UK. And yet, when we're faced with the possible destruction of that company, the government doesn't act. That's why the next Labour government will broaden the scope of the public interest test to include explicit consideration of the needs of our economy, taking advantage of new freedoms that we may have to allow the government to intervene to protect our industrial base. An important step towards reprogramming the economy so that it works for the many, not just the few. Reprogramming our economy to reward good business practices, reining in speculative finance so that it serves, not distorts, the whole economy, backed up by strong industrial strategy, investing in our physical infrastructure and our people. This approach, I believe, is vital if we're to develop our manufacturing strength. That's why the next government is committed to working with you to achieve this. Thank you very much indeed.